Greetings and welcome to My Insurance Matters, a 5-minute weekly program designed to assist individuals and businesses manage their exposure to risk and make informed insurance decisions. This is John Shega, your host and owner of Aspire Insurance Agency. Last week we discussed the fact that we're in a time of falling prices in insurance. In the industry, this is called a soft market. Although there are no signs of stopping, it will end and then a hard market will start. In a hard market, premiums rise dramatically over a few years, usually about 3 or 4, before the start of another soft market. A soft market often lasts 2 to 3 times longer than a hard market. Again, we're in a soft market, which means insurance rates, generally, are falling. In a future show, we'll explore the reasons for a hard and a soft market. Today, I'll briefly share how the last hard market impacted my insurance career and the reason for this radio show. As it impacts you as a consumer, I hope you'll listen for the next few minutes. First, a word from our sponsor, the Smile Center.
Let the Smile Center put a smile on your face. Smile Center.
Our sponsor this week is the Smile Center. With offices across Minnesota and hours that include evenings and weekends, you'll be sure to find quality help that fits your schedule and pocketbook. So when you're in need of dental help, give the Smile Center a call. You'll be glad you did.
Smile Center.
Welcome back to My Insurance Matters. As a reminder, you can email us at www.myinsuраncematters.biz with any questions or concerns regarding insurance. Prior to the break, I was explaining the difference between a hard market and a soft market in insurance. In a hard market, premiums rise dramatically over a short period of time. In a soft market, prices fall gradually, but over a longer period of time. We are, and have been, in a soft market. For over 18 years, I was an employee of 2 of the largest insurance companies in the United States. I started as an underwriter trainee and ended up as regional director managing over $23 million in premium. We picked our accounts carefully, which caused our losses to be low. This allowed our region to produce a significant profit to the insurance company. Then a hard market rolled in. Again, in a hard market, prices rise dramatically, and it's possible because other insurance companies are doing the same thing at the same time. We started planning for the coming year, and the message from corporate was that prices needed to go up. Now, my dad was a skeptic of insurance, and my grandfather didn't believe in it. Both never had a serious loss, so they never agreed that their premium should go up because others had losses. Sound familiar? Again, the policyholders making up my $23 million in premium as a whole had very low losses, so I didn't want to lose them. With a mandate that I get an increase on each, I decided to try 3%. Using my father as a reflection of the entire group, I suggested a 3% increase as I thought this would satisfy the home office, but not cause enough pain to cause my policyholders to move to another company. After weeks of further planning and discussion, I received an email advising that the average increase on the entire $23 million had to be 18%. Again, that was the average increase, and that meant I would be rated as an average employee during my performance review. I had never received an average rating on my performance review, and I was not about to start. None of it made sense to me, so I made a case as nicely as I could. My manager flew to Minneapolis to meet with me, and as always, we had a cordial meeting. However, when it came to discussion about the rate increase, he looked me straight in the eye and simply asked, "John, are you a team player?" Of course I said I was, but in my mind I knew I'd be making a career change. My manager did confirm our book was very profitable, and they didn't want to lose it. So for that reason, I was given authority to reduce my rates to whatever was needed to keep the retention at 80%. However, I couldn't drop rates until 20% of my clients canceled their insurance. I went home that night and told my wife I would be making a career change, and I prayed every night for 3 months that every one of my policyholders would cancel their policies. I did so because the sooner 20% left, the sooner I could reduce my rates on the remaining clients. The retention never got close to 20%. So a hard market is why I became an insurance agent, started my own insurance agency, and the reason for this show, My Insurance Matters. The more you know about insurance, the better able you'll be able to make informed insurance decisions. Contact us at www.myinsuраncematters.biz with any questions or concerns. Well, I see we're almost out of time already. For Steve, our piano player, and all of us at Aspire Insurance Agency, our very best wishes for a safe and healthy week.